Well, thank you very much, Mr. Chairman. Let me apologize for my comings and goings, but we have a national defense bill on the floor, and we have a appropriations bill that I'm the chairman of the subcommittee. So let me just go back to a question I think that was raised by several of my colleagues and Professor Coffey. When we talk about raising the number of individual holders of the of stock to qualify for an exemption for security laws, I interpreted or assumed from your answer, we also have to look back at the notion of beneficial ownership, that if we don't fix both, we could have this situation where we raise it to X level, but in fact, the number of people who actually hold the shares could be huge. So is that something has to be done in your view, sort of in parallel and together, otherwise we just don't fix the problem?
I think you're summarizing the intent of my testimony. You just said it clearer. You can game, you can manipulate this, not only in terms of when you become a reporting company, but several of these bills allow companies, particularly banks, to deregister or go dark in the vocabulary if they can get their number of shareholders of record below 1,200. If you let them escape the system, even though they're now making disclosure, by getting the number below 1,200, they can pressure their shareholders to switch from record ownership to street name ownership, beneficial ownership, in order to escape SEC oversight. And frankly, I will tell you that if they go dark, bad things happen in the dark. Conflicts of interest don't get disclosed. Foreign Corrupt Practices Act gets escaped because you're no longer subject to it. I think you've got to solve this problem more or less simultaneously. I'm not against raising the level. Maybe that should be adjusted. But I think it's got to be a meaningful level that gives priority and protection to small issuers and doesn't allow large institutions to escape out the back door.
I'd like to, Ms. Cross, to respond also, but before I do that, one of the arguments with respect to bank holding companies is that they are subject to significant financial regulation. But your response seems to suggest that that wouldn't deal with a lot of the issues, Foreign Corrupt Practices Act, et cetera, and the fact that a lot of financial reporting is deliberately close held because of they don't want to disclose proprietary information or many other reasons. So this...
You've again summarized me better than I did. Bank regulation is looking at the solvency of the bank. SEC regulation is looking at things like conflict of interest and the minority investors' problems.
Thank you. Ms. Gross, your comments on terms of the relationship between the number of owners and the notion of beneficial ownership and record ownership. It has to be done in tandem, and also any comments in terms of financial institutions in particular.
Thank you. So the number of holders question and whether you should adjust both the number of record holders and require a look-through to how many beneficial holders that is something that we think is a very important part of this conversation. If Congress adopts the legislation that's before it, that doesn't preclude the SEC from still going ahead and looking and trying to decide how should we count. And in fact, one could look at the numbers that are in the bills and then decide, once you figure out how that translates in terms of beneficial owners, that it requires further adjustment. Because a change from 500 to 1,000, when it turns out 1,000 is really 50,000, would result in a different policy call. So those are all things that the staff is helping the Commission consider.
Just a comment, given recent observations, is that there are some who've criticized Dodd-Frank for many different reasons, but so much discretion given to the SEC. And then seeing some of the rules being voided by court appeals, by courts, by economic analysis being, et cetera, that I might argue if we're going to fix this, we should probably fix it in the legislation rather than rely upon sort of the inherent rulemaking or the implicit rulemaking of SEC. That's just a comment. If I can, again, Mr. Chairman, change the subject slightly because Mr. Geisens, you not only are a very articulate advocate for the company's position with respect to these legislations, but you run a business that is Main Street in every little community. I know I drive, particularly around here, I drive by them all the time. And we are currently engaged in a debate about the extension of unemployment benefits, et cetera. Do you have any sort of notion about the effects on the demand in a convenience store, gas station operators like you if we don't do this? Are you anticipating a shock to your sales?
Senator, let me make sure I understand the question. So if unemployment benefits aren't extended, what
Right.
would be the impact?
Yeah.
I would only be speculating, but certainly the American consumer, as we've seen in our sales, is pinched. They're trading off and making decisions each and every day to make ends meet. Some of our business is discretionary. Some of our business, frankly, is not in terms of gas. So I don't have a particular belief, but I would tell you over what we've seen in the last several months, it would suggest that that could have a negative effect on our sales.
Thank you very much. That's very fair and very thoughtful answer. If I may take one more question. Mr. Chairman, let me go back to Professor Coffey, and that you also in your testimony, you talked about the increased use of Regulation D for private offerings. In fact, there's a suggestion that $320 billion was raised in the first quarter of 2011 alone, and that it could put us on a trajectory for $1.2 trillion through these are private offerings, which are in some respects a surrogate or a replacement for the IPO offerings. And these offerings are about $1 million, so it seems to be that the markets are responding, at least through Regulation D, to the needs of small companies that are looking to get started. Can you comment?
I think the SEC's chief economist.
You've got a
SEC's chief economist has estimated that between 2009 and maybe the middle of 2011, there were 37,000 Regulation D offerings, and the median size was 1 million. That means that many issuers are choosing the private market route. I don't think that the SEC or Congress should tell the private issuer which way to go, private versus public. Make your own choice. You should make sure that both avenues are available and are both consistent with reasonable investor protection. And issuers will choose what's best for them. So I think we have to recognize that Reg D is likely to be the main highway for lots of companies raising capital.
One final question, and that is, and you might not have the statistics, but one of the persistent criticisms of the regulatory structure is it's expensive, particularly when it comes to initial public offerings. Is there any sort of notion of what the compliance costs are in a public offering vis-a-vis the investment banking costs? I mean, the promotion cost, the advertising cost. If the actual compliance costs are relatively small, then the monetary deterrence for public offering isn't about regulatory; it's about other factors.
I know a number of studies of what the costs are, both in going public and in remaining public in the first couple of years. If you look at the costs of remaining public after the IPO, the largest single cost is D&O insurance, because you don't dare go public without insuring your board. That can be nearly $1 million there. Then you have costs for enhanced auditing. This is not 404. This is basically auditors charge more if you're a public company because they're afraid of getting sued. So that's significant. There are costs for listing fees, and there are some other costs, but I'd have to say that the costs of 34 Act, or Securities Exchange Act filing, would only be fourth or fifth on this list. That doesn't mean that we don't want to reduce those costs, but it's not one of the top 3 costs compared to things like D&O insurance or higher auditing costs.
But these costs, to be fair, are all related to the public status of the company.
Yes, and first of all, when you do a public offering, you pay underwriters. Underwriters normally charge 6.5% to 7% of the total offering price. It's a lot cheaper in private placements.
Thank you all very much. Thank you, Mr. Chairman. You're very kind.